Welcome to FX Signal Team. Today, we are going to start 6th chapter of Part 2. The main topic of this chapter is the Fakey signal and false breaks. Let's start. In the inside bar chapter, I briefly discussed false breaks of inside bars at the end. This is what the Fakey setup consists of at its core, a false break of an inside bar setup. The Fakey setup combines both the inside bar and the pin bar, on Fakies with a pin bar. More on this later, so it's critical that you have read all the previous chapters leading up to this one. Instead of the market going with the initial break of the inside bar pattern, the market fakes out and reverses back on itself over the next few days. Key point: a Fakey setup is a false breakout from an inside bar setup. In other words, if an inside bar setup briefly breaks out, but then collapses back in on itself, and closes back within the mother bar or ideally the inside bar's range, you have a Fakey setup on your hands. This initiates a solid burst of momentum which can last one or more days. False moves like this can even create trends in the opposite direction, so it's critical that you learn how to identify and take advantage of them. The psychology of the Fakey setup. The Fakey setup is what I consider my insider price action trading strategy because it gives you a clear window into the minds of the big players and high rollers in the market. Often, the market will appear to be headed one direction but will then quickly reverse, sucking all the amateurs in as the professionals push price back in the opposite direction. The psychology behind the Fakey setup is very interesting, perhaps more so than any other setup I trade or teach. The psychology of a Fakey setup can be explained in terms of the condition the market is in when the Fakey forms. If the market is trending and a Fakey setup forms, which implies the trend will continue, then the Fakey was formed as a result of traders trying to pick the top or bottom of a trend that was not ready to pull back yet. This is because, generally speaking, amateur or losing traders are largely addicted to trying to pick the top or bottom of a trend. I don't fully understand the human psychology behind it, but from my years of helping traders, I know that many, if not most people, prefer to make trading way harder than it actually is by continuously trying to pick the top or bottom in a market. The Fakey signal formed in a trending market simply is a result of losing traders thinking the top or bottom is in place, followed by the pros or big boys coming in and pushing the trend further in its underlying direction. Professional traders look to buy weakness in a rising market and sell strength in a falling market. Amateurs generally try to do the opposite. In other words, they are fighting the trend while the pros are trading with it. Fakies can also form at actual market tops and bottoms for the following reason. Traders who operate on emotion are typically going to be the last ones in on a strong move, because they are not following their trading strategy, or they don't have one. They are waiting until it feels good to enter, which is usually right before the market is ready to reverse. We often see Fakey setups form as the very last amateurs enter the market and the professionals then push the market the other way, causing liquidation of poorly planned positions. The same psychology applies to false breakouts of support or resistance levels, and we often see Fakey setups form as breakouts from support or resistance fail to follow through. This is why it's better to wait for the real breakout by trading the retracements back to the breakout level after the initial real break occurs, rather than trying to guess which break will be the real one. The anatomy of a Fakey setup or different types of Fakies. A Fakey setup will typically have two basic forms that you need to be familiar with. The Fakey with a pin bar is the false break bar, and the Fakey without a pin bar. Generally, this type of Fakey will have a 2-bar false break bar. Important note: not every Fakey setup you see will look exactly like the two above, but the best ones should look pretty darn close. As a general rule of thumb, if you find yourself confused as to whether or not a Fakey is present and you are emailing me about it or asking other members forum if they think it's Fakey, it's probably not worth risking your hard-earned money on. The best Fakies, or any other price action setup, tend to be well-formed and obvious. Especially while you are learning these strategies and setups, you should only be looking for the most obvious ones. Later on, as you get more experience under you, you may also find less obvious Fakies and other PA setups that also work out for you. Major Fakies. The major or classic Fakey setup is considered as such because the Fakey bar or bars will violate the high or low of the mother candle before pushing back in the opposite direction, thus creating the false break of the mother bar. Entry can be taken after the initial false break either on a break of the opposite end of the mother bar, a break of the inside bar, or on a 50% retracement of the Fakey bar, if it is a long-tailed clean and obvious pin bar. The classic major Fakey entry is a break of the inside bar or mother bar, but if there is a very clean and obvious long-tailed pin bar, you can enter near a 50% retrace of the pin bar. The major Fakey setup has two basic forms. It can either occur with a pin bar as the Fakey bar, or with two bars as the Fakey bars, one breaking the mother candle high or low and the other pushing back in the opposite direction. The following two diagrams show examples of each. Minor Fakies. You may not yet be familiar with the minor Fakey setup, and perhaps it is this Fakey structure that causes most of the confusion in traders. Essentially, a minor Fakey occurs when there is a mother bar, followed by an inside bar, and then a false break of only the inside bar, and not the mother bar. This is considered a minor Fakey or false break because obviously a rejection of an inside bar high or low is not as significant as a rejection of a mother candle high or low. Minor Fakey setups must only be entered on a break above or below the mother candle high or low, after the initial false break of the inside bar. Because we need extra assurance the market is poised to move in our direction because there was no significant false break of the mother bar as there is with a major Fakey. As with major Fakies, we always try to trade minor Fakies in the direction of the dominant trend, as that is when they have the highest probability of working in our favor. Important note: I only recommend you attempt trading minor Fakies on the daily chart time frame. There are too many of them on lower time frames for them to be worth trading on those time frames. Minor Fakies can also occur both with pin bars and without pin bars. The following two pictures show examples of each. Fakey stop-loss placement notes. Stop-loss placement on the Fakey setup is classically just beyond the high or low of the false break bars. You can also elect to place the stop-loss near the mother bar 50% level, or perhaps the pin bar 50% level if it's a Fakey with a pin bar. This gives you a bit more flexibility on Fakies with larger mother bars, where getting a good risk over reward on the trade might be tricky with a stop loss on the other end of the false break high or low. False breaks. Before we move on and analyze some chart examples of Fakey setups, it's critical that you understand the difference between a Fakey setup and a false break. Remember this, a Fakey setup always includes a false break of at least an inside bar setup, and possibly a support or resistance level as well. Whereas, a false break is not always a Fakey, it can simply be a false break of a level. A pin bar signal can make a false break of a level, for example, so a Fakey is always a Fazzle break, but a false break is not necessarily always a Fakey. Here's an example of trading with false breaks. In the chart example below, the AUD-USD was in a clear uptrend on the left side of the chart. However, it eventually ran into resistance up near 0.9450 to 0.9500 area, and this is where we can use false breaks to watch for trend deterioration or potential reversals. Note the clear false break of the key resistance near 0.9450. There were two clear false breaks of this resistance that, as of this writing, have led to at least temporary reversal to the downside. These are the type of price action events that we can watch for as price approaches key levels, to give us strong clues as to what might happen next. In this case, the false break of the key resistance near 0.9450 to 0.9500 could lead to a substantial move lower. Price has already begun falling modestly lower as of this writing. Fakey trade setup examples. Major Fakey setup with long-tailed pin bar on 4-hour chart time frame. In the chart image, we can see a beautiful 4-hour time frame major Fakey signal with a long-tailed pin bar. You might notice that there were 3 inside bars in this Fakey before the pin bar or false break. This is okay. Sometimes you will have multiple inside bars within a mother bar before the false break occurs. There's really no set number of inside bars that are okay to have, but ideally we like to see the Fakey pattern form with anywhere from 1 to 4 inside bars. After about 4 inside bars, it gets a bit dicey and you will need to use some common sense and discretion in determining whether or not to take the Fakey if one forms. The Fakey below was a very well-defined one that rejected support and an event area from the daily time frame. This was also a nice example of trading the 4-hour chart in line with the higher time frame trend, as the daily chart trend was bullish at the time this Fakey formed. Major Fakey setup at 8/21-day EMA layer, in line with daily chart trend. Trading Fakies with the near-term chart momentum and trend is very important because I said earlier, it's the easiest and most lucrative way to trade them. We can use the 8/21-day EMAs to help us see the near-term momentum and trend, as discussed in Chapter 3 on trends. In the chart image, we can see the 8/21 daily EMAs had just crossed lower, signaling that momentum was bearish and a downtrend was likely taking hold. Then we see a Fakey sell signal formed. Note, the Fakey formed after a retrace back to the 8/21-day EMA resistance layer. This is how we trade from value. Remember, we are looking to sell strength in a falling market. This is a good example of using the Fakey setup to do so. Here's another example of trading Fakies with near-term chart momentum. Note, The 8/21-day EMAs had recently crossed lower following a large decline and break lower from consolidation. Shortly after, a well-defined or obvious Fakey sell signal formed showing rejection of the 8/21-day EMA resistance layer. We could have placed our stop near the mother bar 50% level and the entered short as price fell below the inside bar low. This would have easily gotten us a 4 times risk profit on the trade, or 1-to-4 ratio risk reward. Major Fakey setup at key resistance level. After you feel confident trading Fakies with the daily chart trend, you can learn how to trade them against the trend. The chart image below gives us a near-perfect example of how to do so. However, I strongly recommend you focus on learning to trade them with the daily chart trend until you are very comfortable and confident before you try trading a counter-trend Fakey. Note the very large and dramatic bearish major Fakey reversal signal that formed at key resistance in the EUR/USD in early May of this year. This Fakey effectively changed the daily chart trend from bullish to bearish. You will see Fakies do this sometimes, change the trend. The main reason this signal was worth taking against the recent bullish momentum and underlying uptrend was that it formed at a key chart level of resistance, and it was a very large or obvious Fakey or false break signal. There really was very little doubt that this Fakey was significant and would lead to at least a temporary rotation lower. You could have entered intraday, as price broke down past the inside bar low, following the false break of key resistance. This really would have been the ideal entry on this particular signal. If you missed that entry, you could have also entered near the mother bar low, as price broke down past it. Other than that, realistically, most of us would have missed the entry on this one simply because the false break bar was so huge, and we would have logically been waiting for a retrace entry after the false break bar closed, which obviously never occurred. Counter-trend Fakey setups to avoid. You just saw an example of a counter-trend Fakey signal. That was one worth trading and worth risking some money on. However, you should know that the majority of counter-trend Fakies are ones you want to stay on the sidelines for, meaning, don't trade them. It's important you know the general type of counter-trend Fakey to avoid. We can see an example of one in the gold chart below. Note how the market was trending consistently higher prior to the formation of the counter-trend Fakey. The 8/21-day EMAs were crossed higher and the market was making a consistently higher pattern of higher highs and higher lows in relatively low volatility. These lower volatility or consistent trends are the worst to try and trade counter-trend because there's a reasons why the trend is consistent and strong. Now, quite frankly, we don't really care what these reasons are. All we need to know is what the price action is telling us, and in this type of trending market, it's telling us not to trade counter-trend. Note also how the Fakey did not form at any very key level of resistance, and it was not larger or sticking out from the surrounding price action. These are all reasons why this was a bad signal to take against the trend. Remember this, because it can save you a lot of money, time and misery. Minor Fakey. Next, let's take a look at how to trade the minor Fakey setup. It's really not very complicated. It's simply a false break of an inside bar within the mother bar range. So, there is only a false break of the inside bar, not of the mother bar. Remember, I only recommend you trade these on the daily chart time frame. In the chart below, we can an obvious minor Fakey buy signal that formed just above a support level on the GBP/JPY. Note, the false break was also a pin bar. This is nice when it happens, but it's not necessary. It's just an added piece of confluence for the trade. The market surged higher and tested the next key resistance level near 173.13 before moving significantly lower again. Note, your stop loss was best placed near the mother bar 50% level of this setup, since entry can only be on the break of the mother bar high on a minor Fakey. Thus, to get a realistic or good risk reward on the trade, we need to place our stop near the mother bar 50% level if it's a larger mother bar like this one. Miscellaneous notes on the Fakey setup. A Fakey signal or false break that occurs in a trending market is an especially strong trend continuation signal. For example, if a market is trending higher and you get a bullish Fakey, that means the false break would be of the low of the mother bar. It's a strong signal that the uptrend is ready to resume. Opposite for downtrend, of course. The psychology behind a false break in a trending market is especially strong, and that's why Fakies might just be my favorite trend continuation signal. The Fakey setup is perhaps the most powerful price action setup I know of. It actually shows you the underlying psychology behind what is happening in the market and tells you what is likely to happen next. It works best in trending markets because a strong trend has both fundamental and technical reasons for why it is moving. When we get amateurs trying to pick tops and bottoms in strongly trending markets, it creates a false break because the pros jump in and take advantage of the temporary pullback that was created on the greed and emotion of the amateurs. Fakies can be traded counter-trend, but just like any other counter-trend setup, they need to have extremely obvious definition and occur at extremely obvious daily levels of support or resistance. Trying to trade a 1-hour Fakey setup against a strong trend is essentially like standing in front of a moving train and hoping you won't get run over. Do not trade counter-trend Fakies until you master trading them with strong trends on the daily charts. And when you do master trending Fakies, only ever consider a counter-trend Fakey if it meets the above requirements and is on the 4-hour chart or daily chart time frame. Our next chapter will be the tailed bars.